But I still want to understand, because of the regulatory overhang, because of this whole transition that's happening in the business model, one wonders whether or not China can sustainably grow even at 3 or 4%, because the extreme calls on the flip side are of no growth or negative growth.
Yeah.
Is that possible?
I don't think so. I think China, for instance, this year can still grow at 5%, plus minus maybe 1%, because China is still not an industrialized nation yet. And a major effort by this government is to develop its high-value-add manufacturing sector. Take, for instance, last year, right, EVs and now even 5G smartphones, which uses China-made chips, are two major innovations. But for some reason, investors are not looking at the positive side of China's economy and focus mostly on the negative aspects of the economy. So I think there is a perception gap in China today.
Perception deficit, you would say?
Maybe perception deficit. There's that investors focus more on the negatives than the positives.
What about the regulator? Hasn't the regulator made it difficult?
Again, here, I think there is a perception gap. That is that investors feel that the government or the regulators are anti-capitalism or anti-entrepreneurship. You look at, for instance, the fine imposed on Alibaba and Financial. They were a fraction of those fines imposed by the US regulators or the European regulators on the internet companies. Right? Microsoft, Apple, Google have been fined in billions of dollars for the last 10 years, right? But for some reason, investors don't focus on those things and jump to the conclusion that Chinese regulators are anti-capitalism.
On that point about the perception gap, as you've been talking about, so what is it going to take to bridge that gap? Because we've had the economic policy meetings late last year, this focus on pro-growth, but clearly that message hasn't come through to the investors despite the low valuations we've seen. And just also on your point about that perception gap, I think something that a lot of fund managers have been bringing up, of course, is in relation to the gaming stocks, right? And those regulatory rules kind of shocking investors. So is there something to that, though, that perhaps there is still uncertainty there?
Good point. I think policymakers should talk a bit more. They are focused only on actions or the deeds. Therefore, investors are confused as to what are the true intentions of the regulators. So I think there's really a need for regulators and even government officials to explain, not just once, but repeatedly, the rationale behind their actions so that people can really understand what are the true intentions of the regulators and therefore understand the direction in which the economy is heading or the nation is heading.